So when you think about hard assets, the stuff that holds its value when currencies get a little shaky, what comes to mind? Probably gold, right? Real estate, maybe some classic farmland. But today, we're going to go a layer deeper. We're looking at a whole new class of asset that some of the world's sharpest investors are targeting. They're moving beyond the soil to what's hiding right underneath. Let's dive into the world of Farmland 3.0.
And that quote right there, that's the whole ballgame for today's explainer. It's a huge shift in how we think about what gives land its real, lasting value. See, it's not just about the corn or soybeans you can pull off it this year. The real long-term play, the real alpha, is about controlling the one resource that, well, life itself depends on.
So here's how we're going to break it all down. First, we'll look at the big picture, why everyone's suddenly so thirsty for real assets. Then, we'll use a pretty cool parable to frame how we should think about this stuff. After that, we'll get into the nitty-gritty of how rights can be more valuable than physical things. We'll look at how you actually structure a water trade, face the single biggest risk in this whole game, and then at the end, we'll ask the big question, is water actually the new gold?
All right, first up, the thirst for real assets. In a world of digital everything, where money can basically be printed out of thin air, why are people getting so obsessed with stuff, tangible things you can actually touch? Well, it all comes down to a search for something real.
Anytime you see central banks firing up those printing presses, or you get a whiff of economic trouble on the horizon, the smart money starts to move. It's like a flight to safety, a scramble for things that can't just be created with a few keyboard strokes. Investors want assets that have real, intrinsic value, things that are still going to be there and still be worth something 10 or even 100 years from now. Now, this isn't some new trend, but the hunt for what really qualifies as a safe haven is definitely evolving fast.
And here's the classic example, the poster boy. Gold. It's rare, it's been treated like money for literally thousands of years, and it really only has one job, to just sit there and hold its value when everything else is going crazy. A kilo of gold today is, well, it's still a kilo of gold in 10 years. It's the ultimate defense against currency losing its punch. But what if there's an asset that's just as scarce, but infinitely more important?
And that's where farmland comes in. Traditionally, you buy a farm for the crops it can grow. That's its yield. But this Farmland 3.0 idea says you're looking at the wrong thing. The dirt is just a container. The real prize, the hidden asset, is the water underneath it. And even more than that, it's the legal right to use that water. That right, that piece of paper, is becoming the most valuable part of the whole equation.
Now, to really wrap your head around this mindset, I want to tell you a quick story. It perfectly captures the difference between just working for money and building a real asset that works for you. Okay, so imagine this little village with no water. Two guys, Ed and Bill, get the job to supply it. Ed immediately grabs 2 buckets and starts running back and forth to the lake. He works super hard, makes some money, but if he stops running, the money stops. Bill, on the other hand, he kind of vanishes for a while. He's off designing and building a pipeline. It takes time, but when he's done, he just turns a tap and boom, water flows to the village 24/7. He hasn't created a job, he's built a system.
So here's the question this parable forces us to ask. What are you really investing in? Farming the land for a crop every year? That's like being Ed, carrying buckets. Your income is totally tied to this year's work and this year's weather. But owning the water rights? That's being Bill. You've built the pipeline. You own the source, the system that delivers the value, whether you're out there farming yourself or not.
All right, let's build on that pipeline idea. Owning a right to something can actually be way more powerful than owning the thing itself. Now, this sounds like some complex finance stuff, but a really simple story makes it crystal clear. Just follow me on this. Imagine Farmer Brown's got a 100-acre farm. It's worth maybe $10 an acre, nothing special. Now, you don't buy the farm. Instead, you buy a contract, an option, that gives you the right to buy that farm for $10 an acre anytime in the next 90 days. Then, boom, an oil company strikes it rich on the land next door. Suddenly, that sleepy farmland is worth $10,000 an acre. Now, Farmer Brown still owns the land, but you have the control. Your piece of paper is now the key to everything. Anyone who wants that land has to come talk to you because you hold the right to buy it for next to nothing. And that story, right there, is a perfect illustration of what a derivative is. Your option contract's value isn't just made up, it's derived from the value of the actual farm. Water rights work in a really similar way. They're a kind of legal derivative, sometimes called usufruct rights. Fancy term, I know. It just means you have the right to use and profit from the water even if you don't technically own it. And the value of that right goes up and down with how scarce and in demand that water is.
Okay, so the concept makes sense.
But how does this actually work in the real world? How are these legal derivatives, these water rights, actually structured? Well, let's break it down with an analogy that anyone who knows about stocks will get immediately.
This table makes a super complex legal system pretty easy to understand. In a lot of places, especially out in the American West, water rights work on seniority. So, senior rights are like preferred stock. They get paid first. If there's a drought, they get their full share of water before anyone else sees a single drop. Junior rights, they're like common stock. They get whatever's left over. If it's a really wet year, no problem. There's plenty for everyone. But in a dry year, junior rights holders might get ZEP. So as an investor, you've got a clear risk-reward choice. Senior rights are safer, more stable. Junior rights are cheaper, but way, way riskier. Now, because we're talking about huge pieces of land and rights that are worth millions and millions of dollars, this isn't something you're going to do on your laptop. Instead, investors will pool their money together into things like a syndication or a specialized private equity fund. You could think of public companies like Gladstone Land or some really niche private funds. They have the deep pockets and, more importantly, the lawyers to buy and defend these assets.
So far, this whole thing sounds like a pretty incredible opportunity, right? And it absolutely can be. But we have to talk about the single biggest, scariest threat to this entire idea. And it's not a risk you can just plug into a spreadsheet.
This quote from one of our sources just says it all. The second you own valuable water rights, you've painted a giant target on your back. You've got cities desperate for water, environmental groups, other landowners. Everybody wants a piece of the most valuable resource on the planet, and they are more than willing to drag you into court for it. That right you have on paper is only as strong as your ability to defend it.
And the cost of that fight is just brutal. I'm not just talking about the legal fees, which are insane. It's the emotional toll. It's years of your life just sucked into this conflict. It's all the other great opportunities you miss because your time and money are all tied up in a legal battle. And here's the real kicker. Even if you win, the court's decision might not even be what you need to actually make the investment work. It is without a doubt the #1 risk in this entire game.
So this all brings us to our final big question. After looking at the massive upside, but also staring into the abyss of risk, where do we land? Can we really think of water rights as being the new gold? Let's just quickly remember what makes gold, well, gold. It's scarce, right? The global supply only grows by a tiny bit each year. And it has this incredible history, thousands of years of people just believing it has value. It's the financial asset you run to when you don't trust anything else.
And there's the difference. Water is also scarce. In many parts of the world, it's becoming terrifyingly scarce. If you actually look at a 20-year chart of water price indexes versus gold, it's not even a contest. Water has crushed it. And why is that? Because water has one thing gold will never, ever have. It's non-negotiable for survival. You can live without gold. You can't live without water. This isn't about financial belief. It's about biological reality.
And that's really the thought I want to leave you with. It's why super smart investors, guys like Michael Burry from The Big Short, have turned their attention to this space. In a future that feels more and more uncertain, what's a real safe haven? Is it a shiny metal that you lock up in a vault? Or is it a legally defensible right to control the one resource that everything, and I mean everything, is built on? That's the question at the very heart of the Farmland 3.0 thesis.